Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. For those of you who may be stopping by for the first time on this channel, well, it's not rocket science in my opinion. The best way to do anything, keep it as simple as possible. So it really boils down to consistently investing, buying dividend growth stocks and growing companies with positive cash flow that covers the dividend and companies with a high return on their invested capital. I utilize both a dollar cost average approach, consistently investing into the stocks within the portfolio on a weekly basis, as well as if I do a side job with some extra funds, or when I get a bonus once a year, typically around April, I'll put in a big tranche at that time. We cover dividend growth investings, portfolio updates like this every Sunday. So if you are into that type of content, join us here on the Vested Interest community. Hit that like button down below, hit that subscribe button, hit the notification bell so you're notified whenever we put out any new content, and join us on this journey to new financial freedom. That's what we focus here on the Vested Interest community. Again, portfolio updates like this every Sunday morning. Dividend growth investing overall. I do a stock pick of the day series Monday through Thursday as well. So if you have a stock you'd like me to cover in the stock pick of the day series, go ahead and drop that down below in the comment sections below. So as I said, this video is a portfolio update coming to you September 3rd, Sunday morning. Usually these come out about 7:30 a.m. I did add $1,342. We're going to go over all the activity in the portfolio this week, some options we had, any dividends that were paid out, and what we purchased. And if we sell anything, we'll cover that as well as the full portfolio reveal at the end. So stay tuned to see all the positions in my portfolio. Let's jump right in. So the first portfolio activity, we will talk about the options. We did 2 covered calls. We were assigned some shares here earlier last month. We still hold those shares. So we wrote 2 contracts, sold to open 2 contracts. We received $38.92 in premium. Those were to close on September 1st, and the strike price was $69.50. It did not hit that strike price, so they expired. Right here you can see on September 1st. That was the date that they were set to expire. They did not get called away, so we still own those 200 shares that covered that 2 contracts. So we will look to roll this again next week and probably use the same strike price, maybe even drop it down to 69 or 70, depending on where we're at and what kind of options premium we can collect. That added $38.92 in cash, and we did take this. This is basically, you'll see here in a little bit, we bought some Verizon share. This is basically the 1 share of Verizon that we picked up this week. So this is the portfolio providing capital in the form of options premium, and it goes right back into the portfolio just like a dividend would and buys more shares, not necessarily of the same company, but of companies that we own. All right, that was August 28th. No dividends received this week to report, so we're going to skip past that slide there. And we get back to August 28th. It was the first purchase we picked up there. We picked up some realty income, ticker O. We spent $563.37 on the 28th to pick up those 10 shares at $56.34 per share. And realty income is a REIT out of the real estate sector. And those 10 shares add an additional $30.60 in passive income. This is whenever the snowball starts to really get rolling, whenever you start to see, $30, $40 in passive income provided by the new capital that you put in there. Now, whenever realty income pays out some dividends this week and then this month, it will include these 10 shares here. So very nice to see that $30.60 added to my passive income over the next year. Let's keep going. And we weren't done. We went back in on Friday, September 1st. We dropped another $806.47 into the portfolio. And with those funds, we added 1 share of Verizon Communications. And actually, this is really close to that $38. Remember I said that we used that $38 and added that. That's part of the total here, $1,342.84 total that we invested. That's this 806 in the previous slide, the realty income that we picked up as well. And that included the options premium that you saw from NextEra Energy there as well. So pretty much that $38 that we received in options premium picked us up 1 more share of Verizon Communications at $34.96. Ticker VZ, this is out of the communications sector. We picked up 1 share, and these are in reverse order, really. That's why I always do that. If I have some extra funds, I'll throw it into like a SBSW or a MPW, $7, $8 a share. Verizon Communications, then SBSW, Siboney-Stillwater. This is a mining company out of the material sector, ticker SBSY, or SBSW, I mean. We picked up that one share at $5.98. We picked up 17 shares of AT&T, ticker T here. This is out of the communications sector as well. We picked those shares up for $14.70 per share. We added to our Johnson & Johnson position. This position finally pulled back under our cost basis again, and we have been adding anything under 162, anything definitely under 160, so I would not be upset if this dropped back into the 158, 156 range, and I could add some more here. I'm very close to 100 shares of Johnson & Johnson, and I would love to round that out by decreasing my cost basis to do that. Ticker J&J, this is out of the healthcare sector, and they recently did have a spinoff. Cavenue, I think, is the name of the spinoff that they had. So that may be part of this reassessing the value here overall. So we may see it drop back a little bit here in the short term. And we added 10 shares to Enbridge, ticker ENB. This is out of the energy sector. We picked up those shares for $35.50, and Enbridge is one that I'm looking to continue to add as it pulls back here. Very high yielder like this sector. Now, this is a Canadian stock, so you would have to take into consideration the taxes. Typically, it comes out to be the same. We have deals in place with a lot of countries where if you invest in them, you might have to pay their taxes, but then America doesn't come back in and take out taxes. So it's very close to a wash here. You pay the Canadian tax, but you don't get taxed, double taxed, I'll say. Now, if you're in a higher tax bracket, you may have some additional taxes to pay on this. But so talk to your tax advisor on any tax questions. But these new shares here added an additional $53.07 in passive income over the next year. And this $53.07 plus the 10 shares of O that we saw on the previous slide over the next year added $83.67 in additional passive income. Very nice to see, almost just under $100 here. I would love to add $100 a week in passive income to my yearly I'll call it dividend salary. Let's keep on going. Oh, I should have blew this up. Sorry that I kept, usually I blow this up, but we'll run through it anyway. Running through the sectors here. Communications, and sorry that it's hard to see. Like I said, I usually drag this out and blow this up, but I did not do that this time. Communications sitting at 8.69% of the portfolio. Consumer discretionary sitting at 0.17. These are those two shares of Williams and Sonoma. This one has really run up. I would love it to pull back. Now I am looking to add Haverty. If you saw my stocks to buy in September video, you'll see Haverty on there. That is out of the consumer discretionary sector. I'd love for that to pull back a little bit and add it in this slice right here. Consumer staples sitting at 5.21% of the portfolio. Energy is 6.54. Financials making up 10.42% of the portfolio. Healthcare at 17.66. I'm probably, when I hit 20%, maybe I let it go to 25%. I'm going to back off of the healthcare sector at some point, but not quite yet. I'm still seeing some value in CVS. J&J pulled back, so that's another one. Pfizer, I still feel is a lot of value there. So I see a lot of value in the healthcare sector. I usually don't like to get too overweight in any one sector, but right now I'm seeing some value here. So I'll let this go a little heavy. Like I said, probably not any more than 25%, but we're not quite there yet. Industrial sitting at 8.45% of the portfolio. Technology makes up 8.72%. Materials sitting at 14.9%, and that's in second place. Utilities, 5.99. This is the NextEra Energy portion, and I actually hold 100 shares more than I am reporting out here, but I plan on at some point whenever those options are assigned and get called away, I'm going to only try to put 100 shares back, and then I'll run a play on something else with the funds from one of those. So that's why I'm only showing 150 shares instead of the 250 I actually own. REITs and real estate sitting at 13.24% of the portfolio. It is the third place, and no ETFs. I consider my overall portfolio my own individual ETFs. Over here on the right, again, I usually blow these both up, but sorry about that. But you can run through these portfolio sector weights and see the percent breakdown here in this pie form right here in this chart, and then it gives you the monetary, how much money I have invested into each sector as well. And here it is. Always show you every Sunday morning my whole portfolio here. Here is the ticker Ally Bank, Bank of America, Cisco Systems, CVS, Enbridge, Enterprise Product Partners, Hewlett Packard, Johnson & Johnson, Kraft Heinz, LyondellBasell, MPW, NextEra Energy, Nutrien. This is the monthly paying REIT O here, Owens Corning, Omega Healthcare Investors, Pfizer, Procter & Gamble, Sabini Stillwater. This is AT&T, Union Pacific, Vale, the mining company here, Verizon, and there's the Williams and Sonoma. How many total shares I have, and the current price, the market value as of the close of business. So the current price and the market value are always as of the close of business on the previous Friday. My average cost per share right here, my purchase price, how much I have into it, whether I'm up or down. These in the red, I am down on, right? The percent return, if I'm up or down, you'll see how much up or down I am. The greener it is, the higher I'm up right here. Owens Corning up 60%. And then the red, obviously, in the negative. My worst performer, what is my worst performer right here? Verizon, worst performer right there. I'm down $2,029.72 on that one. What sector they fall in, whether they're a quarterly, monthly, semi-annual payer, their current yield, again, as of the close of business on Friday, my yield on cost. So you saw the sector weightings in the previous slide. Well, right here is per position. So the positions weighted right here, estimated annual income over the next year right in this column. What payout months they fall in right here, the dividend growth year over year right here, and the total estimate at the bottom, and where they fall at 15% of their 52-week low. I like to use this metric if I'm looking at getting into a new position. I want it within 15% of its 52-week low. And I'll show you right here on another one like CVS. I'll use CVS. I use this one a lot as an example. It is under my cost basis. My average share is $70.36, and it's also under the cost basis. But let's say this was at a current price of $72. Well, I would still be willing to buy it up to $76.29, right? And then once it got over $76.29, I would kind of back off and not want to buy this, especially if there are other positions in my portfolio that are in the negative, right? So that's kind of how I look at the 15% of the 52-week low column there. Total shares, I have 4,806.983 shares. The market value of the portfolio is sitting at $167,351.76. And I do want to remind you, I am showing NextEra Energy here 150 shares. I actually have 250 shares in my portfolio. So these numbers are down by that 100 shares. I do not include it because at some point I'm going to take that NextEra Energy 100 shares out of and let that be called away, and then I'll roll it into another position and I'll add to the position, or it'll be an existing position here. So I am not showing about 100 times $66, about $6,686. This is off, right? Purchase price $169.86, or $169,186.19. I am down $1,834.43, down 1.08%. Current yield 4.628%, yield on cost 4.57, and this is really what it's all about. The estimated annual income provided by the dividends, the passive income provided by the dividends, paid out on an annual basis, sitting at $7,745.20. Very nice to see that back going in the growing direction. We had sold out, or MPW, no, we didn't sell out. MPW here cut their dividend last week, so this got cut in half from almost, I think it was 29 cents, from almost 30 cents down to 15 cents. So we lost about $480 or $460 in estimated annual income. Maybe it was $412. I can't remember, 400 and something dollars there. Anyways, this was almost double what it is now. So that is part of the reason we are probably not going to roll over 7,800 in October like we thought we would. And the dividend growth sitting at 8.09%. So the dividend yield should grow around 8% year over year. These will change over time. Some companies increase their payouts, some companies decrease their payouts over time. So as they change from year to year, I will adjust this column. But right now, sitting at 8.09% on the dividend growth column. So I am very happy with the performance of the portfolio overall. Let me know what dividends you were paid out this week. Do you do options? How is your portfolio doing? Last couple weeks, I've seen a lot more green days than red days. I think we were down almost 4% this time last week. Now we're only down 1%. So I don't mind seeing some red. It gives me buying opportunities. I'm looking maybe to buy some Bank of America. If you watched my stocks to buy in September video, Enbridge is one that I'm looking to buy. So I'm kind of glad that it's down below my cost basis. I can decrease my cost basis, increase my yield. Verizon's one I want to continue to bring down my cost basis here. Union Pacific, I'd love to pull back right under 200 here so I can add to that one. So this is a good example, Union Pacific here. It's sitting at 221, and my cost basis is $195.19. But if it was to drop back to $211 or under, I would be buying Union Pacific, even though it is not below my cost basis. All right, well, I'm getting a little long-winded. Hope you're having a great Labor Day weekend. Really appreciate you stopping by. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us here in the vested interest community, building a community of like-minded dividend growth investors so we can share our experiences, stocks we're watching, stocks we're buying, tips and tricks that we've learned along the way, like options. I learned about options from watching another YouTuber, The Average Joe Investor. If you haven't checked him out, go ahead and check him out as well. Really like his approach. Really seems like a decent guy trying to help people out here. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So again, if you want me to cover a stock that you would like to look at in the Stock Pick of the Day series, go ahead and drop it down in the comment section below. And hit that notification bell so you're notified whenever we drop any new content. And one more time, if you haven't subscribed, hit that subscribe button. Help me out, guys. It helps with the YouTube algorithm. Every time someone subscribes, shares the videos with anyone they think might find value, drops a comment, and hit that thumbs up button. It really does help me out. Well, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you're having a great weekend. Happy Labor Day, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't abundance. Should never invest any amount. No comfortable losing. Always do your own research. Investigation your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.